Well, it was a day of contrasts. As a result of its big half-yearly profit, Commonwealth Bank's share price surged, and that was the main reason the market as a whole had its third rise in a row. But on the other hand, CSL slumped because not only did the company report an 81% fall in profit and $1.6 billion in write-downs, the board sacked the chief executive, Paul McKenzie, or rather, he retired suddenly, effective last night. Other big moves today included James Hardie because of better than expected third quarter results and Aussie Broadband because it bought AGL's telco business. Now, there was a moment in time 5 years ago when CSL was worth more than Commonwealth Bank, but since then, the bank has wiped the floor with the Biotech and is now worth nearly 4 times as much. And we don't have to look far to see why. The ABS today released lending data for the December quarter. Total housing loans up 9.5%, including a 15.5% rise in loans to first home buyers. But the big picture is shown by the chart here. Investors are back big time after borrowing about the same as first home buyers 6 years ago, about when Commonwealth Bank was worth less than CSL actually. In those 6 years, total housing loans have doubled to more than $100 billion per quarter. Now, a bank would have to try very hard not to make tons of money out of that. Meanwhile, the United States is having an anti-vaccine moment, of course, which is bad news for vaccine companies like CSL. In the US last night, the S&P 500 fell, but the Dow Jones average of 30 big companies rose a bit to a new record high. Gold and silver continued to rally, while Bitcoin went into reverse after a brief rise this month. And the Aussie dollar has popped back above 71 US cents for the first time in nearly 4 years and is also having a trot against the euro, up to a 12-month high just below 60 euro cents. And that's finance.